Hi, and welcome to BizTech's Inside Trading Show. For our first show of 2024, this show is, as we know, all about trading. Every week we discuss what trading is all about and what are the required habits of a successful trader. We also share trading ideas and themes to help you make money. Now, with me today is a new co-host, Jeffery Halley, and our regular guest, Phan Vee Leung, founder and CIO of TrackRecord Trading Academy. Gentlemen, welcome to the show.
Cheers.
Now, V, for a start, we always start with really a quote for our audience, and today's quote is from Peter Lynch.
Yes, and it's something that we always talk about in this business. If you're good, you're right 6 out of 10 times, and in fact, some of the market legends say even that they're less than 5 out of 10 times, right? And you're never going to be right 9 out of 10 times. It's very important to understand this, because I think many in the retail trading sector, they believe that to be successful in trading, you actually have to be right most of the time. So it's not about that. It's about being right at best half of the time, which is not difficult to do. And the most difficult thing to do is to be making a lot of money for the times that you're right, and not losing too much money. In fact, losing limited amounts of your capital for the times that you're wrong. So it's all about risk reward, not about being right all the time. Yeah.
And today we're really going to talk a lot about really what's on top of the crypto world's mind, really the launch of the approval of crypto ETFs.
Yes, that's right. So if we look back into the programs that we did last year, the episodes that we did last year, one of the things that we are right about, it's about Bitcoin. Bitcoin has been going up since we spoke about it. And it's been going up for the past year, and it continues to do well. And we are starting the year with Bitcoin approval, Bitcoin ETF approval. This was very long in the making. And as we know, the US Securities and Exchange Commission has been trying to block this for the longest time, but the courts have pushed back, and eventually they had to give in. And in the approval press statement to the press, they also were very clear in saying that approval of these ETFs, Bitcoin ETFs, is in no way an approval of Bitcoin as an asset class or endorsement of Bitcoins or other cryptos. So they were very reluctant about it, but it's about the matter of law, and there's no legal grounds to block the Bitcoin ETFs anymore. And so we saw the first day of trading of 11 Bitcoin ETFs. It is, I believe, a watershed moment in that it now has become a lot more mainstream, a lot more accessible to the typical investor if they want to get exposed to Bitcoins and hopefully eventually other cryptos as well. So what
now, Jeff, you have some, and I want to stop you there, V, because I think Jeff has some definite thoughts on this whole issue as well.
Oh, well, maybe I'm showing my age. I've always had a healthy dose of not skepticism, caution, shall we say, with regards to the digital asset space. But we do have to acknowledge that it is becoming, and it is a very important asset class to many investors around the world. And I think this ETF situation in the US will certainly improve that outlook. I think. I guess what I'd like to understand from you, V, is perhaps the price action that we saw yesterday. I'm wondering if perhaps a lot of the good news was built into the Bitcoin price already pre this announcement, because it's rallied quite strongly through November and December, but it hasn't really experienced the same amount of upward momentum in January ahead of these announcements.
Yes, that's exactly right. I think there's an old adage in the market where you said to buy the rumor and sell the fact. And it's good to know that after the fact, Bitcoin did not sell off. I think many of the professional speculators, they were expecting some take profit activities to see a pullback in Bitcoins. But I think you're absolutely right. It's very well anticipated. and it's been talked about for the longest time. Even earlier in the week, we had the fake approval where the SEC's Twitter account was hacked, and then they published an approval notice, and then they took control and rejected that announced that was a hack and not a real approval. So we saw Bitcoin prices rushing up to nearly 48,000 and then falling back to 45,000 and then regaining back to where it was on the day, 46,000. And essentially that's what we saw yesterday as well. Bitcoin went up to 49,000, went back to 45,000, and then it's around 46,000 again. But it's very well anticipated. It's very well priced, but it's not about the shorter term. I think the shorter term Bitcoin could be, as you said, has seen all the benefits of this ETF launch. But it's actually, I think it's very important to understand that ETF, which maybe to the uninitiated is a mystery. So ETF is just an exchange traded fund. So they are listed on the stock exchange. So anybody with a stock account, stock brokerage account can buy these ETFs. And what the fund, the management of the ETF does is that they will take these funds to go buy Bitcoin and then keep it in custody for the investors. So now it takes away the headache of digital assets. One of the problems with digital assets is custody problems. Like how do you keep it? How do you keep it safe? Most people get hacked or they forget their password. They don't know how to do it and they make mistakes. And that's one of the biggest hurdles to adoption of Bitcoin as an asset class. So now this is removed. Anybody with a stock account can get involved in Bitcoins.
And so that's an interesting thing, V, because that's prevented a lot of people in the past because they say, hey, I really don't understand this crypto stuff, but I want to be involved in it. So this is a big change then for the average person. The average Joe says, hey, I want to put some money into this. I don't want to do it directly, but an ETF is then an easier way for me to park my money.
Yes, and it's a regulated way, right? And you're using regulated brokers, so you don't have to worry about using crypto exchanges which are run by a few young guys out in the middle of nowhere, right? You won't have stories of FTX where they just collapse overnight based on and then when they found that the risk management is just basically non-existent. So all these problems are in the past, and it's become much easier for the average investor, for the average 401k pension plans, whatever, to get involved and be invested in Bitcoin. So I think if you want to talk about the longer term impact, right, we have to look at the history of ETFs. So for example, gold ETFs was launched in November 2004. It's not so long ago. It's like 20 years ago, of course, but maybe it's quite long for some people. But in the lifetime of financial markets, that's
ancient history.
Yeah, it's ancient history, but it's quite relevant if you think about it. Gold now is a very acceptable asset class. Prior to the ETFs, it's very hard to get exposure to gold, right? And people who invested in gold were considered gold bugs, or there are conspiracy theories. There are people preparing for the end of days buying gold bars, right? But since the ETF was launched, there's a lot of attendant peripheral derivatives as well, right? Like as Jeff was mentioning earlier before we started the program, there's leverage ETFs where you can do 3 times leverage, you can short whatever, anything. And what happened after the launch of gold ETFs is that gold as an asset class became very mainstream, and a lot of percentage of savings in the world were allocated to gold, not because you're preparing for the end of days, but it's a store of value, and you're not trying to protect your wealth from anything else but inflation, as well as to diversify your savings. So
and you don't have to pay to store it. You don't have to have a safe deposit box or a locked bag underneath your bed or something like that.
That's correct. So one of the problems with gold is that before the ETFs and all, you have to figure out how to store the gold. You buy the gold bars, you keep it safe, and this is something more relevant as well to Bitcoin as well. You could buy Bitcoin previously, right? There's people who are savvy enough, you could buy Bitcoin, but you can never see it. You don't know where it is, and you're not sure if it's safe. But right now, it's the custody lies with your ETF provider is BlackRock. You understand BlackRock. You know it's a firm. You know it's regulated. You know it's safe. Its fidelity is okay, right? And so that's where I see it going in the longer term. There's going to be And the other thing to understand about ETFs is that, yes, it's traded. You can buy, you can sell. That's one of the attractive points about being invested in an ETF. But the other thing is that the money that gets allocated to ETFs is actually as the ETF grows, the asset management tends to grow. Otherwise, it just doesn't succeed, right? It tends to grow. And these are very sticky money. They tend to be, if $1 billion is allocated this year, then it stays there for a while until the view changes, because it's I think so if you look at it in that context, the market cap of physical gold above ground is like $13 trillion.
Yes.
And right now Bitcoin is slightly less than $1 trillion. And if Bitcoin becomes as Jeff said, he's skeptical, he's wary, he's cautious about digital assets, because you grew up in a world where there's no such thing as a digital assets. It's just random stuff that you see on the internet. You don't trust it, right? But we are seeing a generation of people growing up in an environment where digital asset is an ETF. You can trade it, you can invest in it, you can buy things with it at some point in time, and people, the millennials, the younger people, they already are invested in a fraction of their wealth is invested in digital assets. And as they get more affluent, they get more savings, and the children growing up under this environment will see Bitcoin as a more viable store of value than gold. So I think the percentage of savings in the world that is going to be allocated to Bitcoin will continue to grow. So
Can I, if I jumped in just one moment there? We have a Bitcoin halving coming up in April. Could you perhaps explain that to our viewers, but also perhaps reflect on its potential impact on the actual Bitcoin price, given that we've now launched all these ETFs in Bitcoin as well?
I think
Yes.
you've got that in some of your slides further up, haven't you, V?
Not on halving. Halving is a question that is from Jeff. So halving for the less well versed about cryptos. Halving just means that so Bitcoin, the process of creating a Bitcoin is intense calculation by specialized computer chips, and when the algorithm, the creation of Bitcoin, the whole algorithm is written as such that it's around every 4 years, the difficulty of producing a Bitcoin increases. Basically, it doubles, and it takes a lot more computing power to produce the same amount of Bitcoins. And as such, the production of new Bitcoins halves. So it's called halving, right? It tends to have a much bigger impact because in the earlier days, so this is the fourth halving. The previous halving was in 2020, and all previous halving coincided with bull markets in Bitcoin first, and then alternative coins, which is all the other coins, all the other cryptocurrencies that are not Bitcoin. And it was considered the start of a signal where the start of the bull run tends to begin, right? The bull run of crypto assets tend to begin. The impact is likely to be lesser now that Bitcoin, the new supply is unlikely to be a big factor in prices. More relevant, I think, is the allocation of more assets, more savings, more money, more fiat currencies, more investors, more mainstream investors getting into the space, getting invested in Bitcoin. But yes, halving tends to the last three has coincided with and some say be the start of bull runs. Is the fourth going to be? It seems likely now that we are seeing that Bitcoin is doing really, really well since last year. And in April, I think the anticipation is that the historical bull runs that begins with every halving is going to be seen again when Bitcoin halves in April.
You've got a couple of other slides to show us, V.
Oh, sure. Yeah. So the ETFs, right? So there's 11 ETFs, but most of the volume were concentrated. $4.6 billion of these ETFs were traded, but most of the volumes were concentrated in the top three, which is the Grayscale Bitcoin Trust, the iShares, which is the BlackRock and Fidelity. So basically, the top three have most of the volume, and I think it is the race to become the biggest and to become the top few, because I think most people will gravitate towards the biggest rather than the smallest, because the assets are the same. They are all in Bitcoins, and you want to have economies of scale, and you tend to be, you feel better with the bigger institutions as well, right? And
it also depends then. If I'm an investor, I always think in terms of transaction fees. And
yes,
I understand that Grayscale, which has been in the market for a long time, obviously it's in the crypto space. Somebody like me is not familiar with Grayscale, but I'm probably familiar definitely with people like BlackRock.
Exactly.
Yes, correct. Yeah, so you make up a good point. We have 11 ETFs, and I think one of the questions that we will be getting from the audience is that which one should I buy, right? Essentially, they're all the same, because they are all going to take your money and buy Bitcoins and keep it safe. So I believe the custody solutions for all of them will be very safe, right? They have to be, they are regulated, so they will be heavily tested, their process of keeping the Bitcoin safe. But more importantly would be the management fees. So I think one of the reasons why Grayscale had a lot of volumes, but it is not yet confirmed, but in my theory is that as you mentioned, Grayscale has been there for a long time. They used to be not an ETF, but they were managing funds to allocate to Bitcoin, but they have just been converted to ETF. Previously, yes, correct. They were trust structure. They were traded only over the counter. You could not easily access it. But now it is converted to ETFs. But the downside is their management fees remains at 1.5%. It was acceptable at 1.5% when it was not widely available and there's no competition, because they are the only mainstream fund that you could for mainstream investors to get into to get invested in Bitcoin. But now that there's 10 other 11 exchange traded funds, no one's going to pay 1.5% unless you're deeply in love with the name Grayscale, right? Because they just invest in Bitcoin. There's no specialist skills involved, right? It just takes your money, buy Bitcoin, keep it. So they still insist on keeping their fees at 1.5%. So part of the volume, I believe yesterday, would be existing investors of Grayscale selling Grayscale Trust, selling Grayscale ETF to buy BlackRock, to buy Fidelity. Yeah, so I think eventually the famous ones, the names that you trust, that you say BlackRock, Fidelity, and the lower fees ETFs will succeed, right? So that's why there's been a competition, a heavy competition to cut fees ahead of the announcements of the approvals. They were publishing their fee schedules. Some of them have zero fees until they reach a certain amount of assets until a certain time, and that's likely to continue. And we're going to see heavy competition on this front going forward as well.
And I can imagine that new investors, say someone like me, a little older and perhaps a little less wiser, would perhaps feel more comfortable investing with the most highly capitalized ETF providers, the ones that they perceive to be where perhaps their money is the safest. That may be incorrect or not, but you may see that sort of flight to quality because of this mindset.
Yes, correct. Yeah, I think it's more about who you trust, which names you're familiar with, and the fees that they charge, right? And it's likely that it will be, by the end of a certain period of time, it will just be a few standing, and the rest will be just managing small amounts, while the ones that are bigger, which right now seems to be BlackRock and Fidelity, and we are likely to see that going forward as well. Yeah. But now, I think that the question to ask is what's next, right? What next after Bitcoin? I think, as we mentioned earlier as well, Bitcoin is just the first step. There are a lot of cryptocurrencies, and the market cap of Bitcoin is currently almost $1 trillion. It's slightly above $900 billion. And the next more liquid, more traded is Ether, which is also doing well, but not as well as Bitcoin since last year. But on the day of on the day of the announcements of Bitcoin ETF approvals, Bitcoin rose 1% because, as Jeff said, it's highly anticipated, it's priced in. But for Ether, it spiked up more than 10%, and the reason is because people expect more ETFs to be approved, and it's unlikely to be more ETFs of Bitcoin, but the ETFs of the next most viable cryptocurrencies, and we're likely to go down the rankings this way. And so with Ether being the next most liquid, next most traded, next biggest, next most famous, we are likely to see a flood of applications coming in for the Ether ETFs, and as a result, I think we're going to see this trend to continue. Ether is not the same as Bitcoin. Bitcoin is at the most biggest usage for Bitcoin is a store of value, but Ether is a coin that is used. Yeah, it's to pay for the fees in using smart contracts and all, and so it does have some utility. And with their market cap currently only $300 billion, while Bitcoin is $900 billion, we are likely to see as assets grow in investments in Bitcoin, we're likely to see growth in Ether as well going forward.
One question here. When I read the SEC's press release announcing these Bitcoin ETFs, we could tell that it was being done with gritted teeth, shall we say.
Yeah.
Now, part of the reason they quoted that was because they'd lost a court case about ETFs and digital currencies, I think in the Washington, D.C. courts earlier in the year, and they quoted that last year, I'm sorry. Perhaps you could tell the audience then why you believe there will be different or more digital currency ETFs in the pipeline, given that the SEC in its release itself was fairly much saying they didn't have any intention of offering any more or approving any more crypto ETFs.
Yeah, so I think reading the press release from SEC Chair Gary Gensler will be quite entertaining for people who are interested in this kind of stuff. It's probably one of the most petulant and reluctant approvals that I've seen before. Within the approval, he mentioned that basically he has no choice, given that the court has pushed back and there's no other legal grounds that he can fight on to stop this Bitcoin ETFs. So they're approving it because they have no choice. And towards the end, it says that it made sure to tell everybody in the world that approval of a Bitcoin ETF is not approval or endorsement of Bitcoin as an asset class, or in fact, any other cryptos as an asset class. So you're absolutely right. I think they will be approving it by kicking and screaming all along the way to approval day. And this is what we have seen with Bitcoin. They clearly do not want this to happen, but they just do not have the legal grounds for this to stop this. And this is likely the case with Ether as well. Not all other cryptos will be approved, of course, right? I think one of the key concerns in approving a Bitcoin ETF is that they try to say that Bitcoin is something that could be manipulated. We're not sure how the price transparency can be kept transparent, can be kept unmanipulated by a few of the big players. So eventually, they couldn't prove that it can be manipulated, and in fact, it cannot be manipulated because it's a $900 billion market, which is very decentralized. The whole tenet of the whole existence of Bitcoin is because it is a decentralized network, and this is a case they will have with Ether as well. It's decentralized. It's hard to. It's not. There are many other things that can be manipulated, right? For example, we've seen with the case with nickel, and in fact gold, silver in various points in history. So there is no legal grounds. I think it will be a very easy case if they be taken to court and show that the precedence has been set by Bitcoin, and it's unlikely that they will be able to stop the next crypto ETF, which is likely to be Ether, and likely to be Ether for a number of reasons, because it's the next biggest. It's clear sign of more money interested in being invested, right? So financial firms are not doing this for the love of cryptos or for the love of the industry, right, or for the love of freedom. It is for the love of money, right? They're trying to make more money. So the next biggest is a $300 billion market. They will try to go for it, and the SEC, regardless of what they think or what they want, they have no legal grounds to stop further approvals, further applications. And as Brian was saying earlier, floodgates have been opened, and we are likely to see more applications coming through in the weeks and months ahead.
Now, gentlemen, it's been a great conversation, but we've run out of time today. Thank you very much, V, for coming on the show and taking your time to give us these great insights. And I, for one, really need to go and look at this a little bit further.
Okay, cool. Thanks, Brian. Thanks, Jeff. It's good to see you guys. The first show of the year. Happy New Year, and Happy New Year to all.
New Year to you as well.
Using the time to listen to us.
Yeah, and that's it for this week's Inside Trading Show. We've been speaking to Phan Vee Leung, founder and CIO of TrackRecord Trading Academy. This has been BizTech's Inside Trading Show. I'm Brian Fernandez, and with me has been Jeffery Halley. And this interview will be on our website, www.biztech.asia. Please check out our syndicated partners for this content as well. Thanks a lot for tuning in.